Hello everyone, let's do a quick update on yesterday's review. So, look, first of all, on the hourly candles we had a huge number of signals indicating growth, but they were ignored around the $70,800 area. And we went lower, to around $69,500 and even a bit below. So, there were growth targets. The nearest of them, as you can see, have been reached. But on the hourly chart, here's the red arrow, it's once again in the overbought zone. At the same time, the 4-hour chart was in the oversold zone, which seems to indicate an upward movement. That is, the overbought oversold indicator is pointing up, but the hourly chart is hindering this movement. From this, we can assume that we will still see another move downward, so that the hourly chart can unload, and then possibly an impulsive breakout upward. Note that the 12-hour chart is already in the oversold zone. Even if I zoom in closely, on the chart, you can see that it has played out. Both the upper orange and the lower pink downside targets have been reached. Formally, the targets have been met. This does not mean that there will be a stop here, but it does mean that there are no longer strong reasons to move downward, especially given the oversold conditions. On the daily time frame, the situation is much worse. Here, the overbought and oversold indicator continues to point downward and indicates further decline. Here we have a bearish engulfing pattern, which has not yet been worked out in the opposite direction. Here, unlike on the Chicago Mercantile Exchange, we have a return within the boundaries of the sideways range, that is, our flat, with the upper boundary at $70,580. We closed below it. Bitcoin closed below the 50-day moving average. And only if or when we see an engulfing pattern of this red falling candle, let me turn on the magnet. Here it is, $71,246.55. If we see a daily candle close above this level, then we immediately switch to automatic growth mode. Well, almost automatic, with the first target, well, technically this is the base of that red candle from which we actively started to fall. That's around $74,000, and potentially it's also the 100-day moving average, the 50-week moving average, and the 100-week, well, actually the 100-week, then the 50-week. That is, the range is $87,000, plus $97,000, and even around $102,000. But for now, for formal reasons, we have a short position on the daily time frame. And this short position is locally supported by the hourly candles. That is exactly why I don't rule out the possibility that we might see another significant drop, or at the very least, a full retest of yesterday's lows. What does a retest mean? Well, we approach them maybe without making a new low. But the key level for us right now is $71,246. That is an engulfing of yesterday's bearish candle. For now, there are hints of growth here, but pay attention to the 4-hour candles. Even though we broke through the 100-period moving average, we haven't consolidated above all the averages. And for that, we also need to move above $71,860. So there are some prerequisites for growth. What are they expressed in? They are expressed in positive momentum. The overbought and oversold indicators on the weekly candles. There is already strong enough oversold condition on the monthly and 12-hour charts. Positive momentum on the 4-hour charts. But to some extent, or actually directly contradicting this, is the situation on the daily candles. The direction of the indicator, this one with the red arrow on the daily chart, and overbought conditions on the hourly chart. But we can't ignore it, we have to take it into account. So, well, here I have some markings, as you can see here. The lowest close during the period was at the 69,173 level. I don't rule out that we might revisit it again. That's how the situation stands for now. Right now it's not possible to make a decision to buy or sell, but the overall situation. It seems well prepared for growth, but I can't say it's an uptrend on the daily candles. For now, the situation is bearish. That's it for now. We'll wait and see how things develop.